Welcome back. Now, 2015 has been a torrid year for platinum. Its price has fallen to 5-year lows, and it's the worst performing precious metal so far this year. Platinum is currently trading at a lower price than gold, around $40 an ounce lower, which is a relatively rare but not unknown occurrence. So let's find out what's led to this decline. Platinum miners downed tools for almost half of 2014, bringing the world's largest producer of platinum, South Africa, to its knees. With little to no production at major mines, output suffered as workers held out for a living wage.
Last year's strike lasted for 5 months. It was the most expensive strike in South African history. Platinum producers have lost revenue of almost 23 billion rand. Workers have lost wages of almost 11 billion rand. And then, of course, South Africa lost a lot of foreign exchange earnings. But eRSA, the Economic Research Southern Africa, indicated that the biggest impact of the strike is actually on the attitude of investors towards South Africa as a mining investment destination.
Economic logic states that if something is in short supply, demand should rise, as should prices. Yet that didn't happen with platinum.
It is strange that the price has not soared as much as people would have expected. But I think there are two factors that has got an impact on that. The one is world economic growth and the lack of it. So the demand side is not always as high as people would think it is. The other side is, of course, the supply side. There is significant amounts of platinum stock above ground, which is actually setting off that, the supply-demand situation. But ultimately, the supply and demand will play its role, and if the above-ground stocks are depleted or becoming near depletion, the price will have to rise.
Jewelry demand aside, platinum is essentially an industrial metal. It's used in catalytic converters in the motor industry, particularly in Europe. So, what will push prices higher?
About 50% of platinum production is used in the auto catalyst industry. So that is really driving the price. Jewelry has got a small percentage of use, about 25% of production, I think. So jewelry will not, in my view, really drive the price. It's really the auto catalyst industry that will drive the price.
During last year's strike, platinum producers stockpiled the metal to prevent possible future shortages. The World Platinum Investment Council estimated above-ground global platinum stockpiles at over 2.5 million ounces at the end of 2014. That would be enough to cover any anticipated platinum supply deficit for the next 2 to 3 years. This could also be keeping prices low.
The stock above ground has certainly had a profound impact on the price and the price decline over the last couple of months, actually, or years even. The other factor that one must bear in mind is there's a 25% recycling of used catalysts. So that is also adding significant stocks to the industry.
So it remains to be seen whether the platinum price will ever reach the same heights again. And joining me this evening to discuss this further is regarding capital management's Jan van Niekerk. Jan, thanks so much for your time this evening. We've just seen what's happened with the price, but what impact has that had on our listed platinum miners?
Hello, Siki. Evening. Is obviously when the price of platinum has come down, that has had a negative impact on the share prices of the platinum miners. Perhaps just the one point to make is that many of these companies produce not only platinum, but actually what we call a basket of commodities, including rhodium, palladium, nickel, and also some gold in the process. So on the one hand, yes, the major part of their production is platinum, but one have to look at the entire basket.
Well, we know that palladium specifically has benefited from this. A lot of people moving towards that in the autocatalytic converter market. But is the palladium production enough to cover up for the losses on the platinum side?
No, I don't think there's any mine that can cover for the losses on the platinum side or the shortfalls by selling enough palladium. So you're right. Platinum is mostly used in catalytic converters that is suitable for diesel engines, whereas palladium is used a bit more on the petrol side. I think it depends on the swing and the regulation between those different regulations in the countries to drive the demand for the various metals. But what we have seen over the same period that the platinum price has been under pressure is that the palladium price has had support and it has gone stronger. And that is mostly because palladium is a smaller portion of the metals that are mined by the companies. But it's also to do with the amount of stockpiles which is above ground, which although people refer to that and the World Platinum Investment Council has tried to put an estimate to that, it is notoriously difficult to get a proper handle on exactly how much stock is above ground.
All right. Would you say that this is some time for consolidation? We know a lot of the miners have indicated that they'd like to get rid of some of their non-profitable mines.
Look, I'm not sure I understand what you mean by consolidation, but definitely there are a number of platinum mines, and you have to distinguish between the mining companies, where some companies own a single shaft, and where some companies own a number of different mines. Certainly in some companies that own a lot of mines and where there are some shafts that are unprofitable, those companies would be looking towards closing down the unprofitable ones and to focus their efforts only on the more profitable mining shafts in those groups.
All right, so where do you think the price is going to go? I know this is a very difficult question because we'd all be making lots of money if we all knew that. But do you expect it to recover anytime soon?
Sure, the timing is the most difficult part. The easier part is that the platinum price is heading higher. It's for a very basic reason. As you have heard earlier, the production of platinum has been curtailed because prices are low and have been falling. So there's no real incentive for any investor or businessman to be putting a lot of money into developing new platinum mines at the moment. So we certainly haven't seen any new platinum mining projects being discussed or approached in the last 3 years. A number of mines are still coming on stream. Those are projects that have been started a long time ago. Take into account that a platinum mine normally takes about 10 years to get into operation from the time that the project is kicked off. So the supply side, we think, are going to be constrained, and if the platinum price remain low, you will see a number of the platinum mines or shafts definitely closing down. And there's, in our opinion, a cliff of that around about 2019, where supply will be seriously constrained. On the other hand, most of the platinum in the world is found in South Africa, and most of those resources, about 80% of the world's resources, are found in South Africa, and of that, about 80% is commanded by 3 companies: Anglo Platinum, Implats, and Lonmin. And if those companies cannot make any profits on producing platinum, they will curtail their production over time, which means that supply will dry up, and the price will have to move higher to incentivize someone else to open up platinum mines in future. So the answer is that the platinum price need to be higher. When we do our calculations, our estimates is that the kind of platinum price that will incentivize anybody to come and open up new mines is somewhere around $1,800 to $2,000 per fine ounce.
All right, we'll have to leave it there. Thanks for your time today. Jan van Niekerk is with Regarding Capital Management. Our daily question and answer feature up next.